Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Thanks so much for being here online with me, Gareth.
Thank you so much, Charlotte. Thanks for having me.
It's great to talk to you, and it is our first time talking, so I wanted to start by asking you if you could tell me a little bit about yourself and about the trading strategies that you use.
Sure, absolutely. So I primarily am a technical trader. So I look at price pattern and time, and it's something that my partner and I developed over really back in 2006 and 7. It's a way of looking at prices. So you're looking at key things like gap fills, double tops, things like that. Patterns, bull flags, bear flags, head and shoulder patterns, and then time, which is the most complex but the most important, which comes into time counts and cycles. And by combining these three, basically, when we look for a trading opportunity, we look for 2 of the 3 factors. And if we can find it, it gives us a really high percentage win rate. So that's the strategy. We don't use a lot of the crazy scanners and all this other stuff. We try to keep it as simple as possible. On my charts, I have the moving averages. That's about it. And the rest is just using my eye to see these things.
Okay, well, thank you. That was very succinct. Now, it's only Wednesday, but it's already been a very interesting week. The situation is evolving quickly, but I want to start with what is, at least currently, one of the latest pieces of news, which is that Trump announced that there will not be any more stimulus talk until after the election. Can you describe to me what impact that's had on the markets?
Absolutely. So we saw yesterday a big collapse in the markets, one of the hardest sell-offs we've seen in some time. And that's saying a lot considering what's gone on this year. But it was really shocking because the market had been kind of riding this wave of hopes and dreams for the stimulus, and it was dashed within one tweet. And it's amazing. I was commenting to my traders today how, this market is just hanging on these tweets, especially when it comes to stimulus. And, you just don't know if today is going to be a day we're going to shoot up, 500 on the Dow or drop 500. Yesterday, it was dropping from the highs. I think it was as much as 800 from high to low. But interestingly enough, then overnight, it seemed like Trump was aware that his tweet really hurt the market. We know he follows the stock market very closely, and he did kind of reopen the door. So then we have the market snapping back today. So it is a wild trading environment. There's no doubt about it. But the market is, what's so amazing is that the market is, I always refer to the market these days, and I have for years, as almost like a drug addicted market. It wants this stimulus. It feeds off the stimulus, and it wants more and more and more. And we saw that with the Federal Reserve, right? And the Fed, we wanted lower interest rates, and the markets would go up. And then we saw stimulus, QE, Q2, QE1, QE2, and so on. We were on QE10 by now, probably. But now the Fed has kind of stepped back and said, all right, federal government, you guys need to do your part. And therefore, now the market is focusing on this stimulus. And it's super interesting to watch. I follow a website, predictit.org, to get my kind of odds on the outcome of the elections, because we know it's so important to this market. And as we've seen the odds of a Democratic sweep kind of increase slightly, the markets have actually started to move up. A lot of people would have said that was very counterintuitive because, or not necessarily the way they would have expected it, because the market is thinking, okay, regulation comes back, higher corporate taxes. But then the market started to say, wait a minute, if you have, all branches of the government being Democratic, you're talking about stimulus. And we know the Democrats have already, toned down their stimulus demands in these negotiations, but they want to do 5 trillion. They want to do. And so in my world, it's like, all right, well, if you get that Democratic sweep, you're going to get a lot of money printing. And again, I mean, we might talk about gold later or cryptocurrency, but that's like something that's super intriguing to me because long-term printing money is unsustainable. It's great in the short term and it could be for years, but at some point we have to pay, the debtor essentially.
Right, and that's given us a lot to think about. I was going to ask you what kind of setup this tension between what Trump is saying, what the Federal Reserve wants, creates as we head into the next month coming up to the election, and maybe even beyond that, because I don't think we can be sure that stimulus talks would necessarily pick up right away after the election. So what are you seeing there, and what opportunities may there be for investors during this time?
Yeah, I mean, that is such a great point because, you have to wonder. So President Trump shut down the stimulus yesterday, and then he reopened the door. My thinking was, all right, so there's 2 ways to think it. Could there be some sort of deal that gets done? Or is he trying to just stall so the markets don't collapse by saying, oh, we might get it done, maybe we'll get this through, and therefore the markets kind of hold and chop around for the next, month, 2 months, or 3 months. But, the question that I had was, does he is he worried? And this is a kind of a weird way of thinking, but is he worried about the stimulus pushing it through right now? Because if he loses the elections, it's then going to kick in. So if you send out all this money in the next month or two, it's going to kick in just as the Democrats take over potentially, or at least Biden takes over. And does he not want to do that? It's in a weird way, it's kind of it's not the proper thing to do, but we all have that little like, oh, I don't want the winner to all of a sudden look like a genius kind of thing, So there's all these thoughts that are going through my head, and it just makes me be more cautious on the long side. I mean, there are certain areas I like on the long side in the market, but for the most part, I have some short positions. I feel more comfortable with those, believe it or not, even though long term, I think you do want to be long. But you have to be cautious right now, especially until we get an official change in presidency, meaning in January, in late January.
Okay, and maybe you could talk a little bit more about some of those short-term opportunities that you are seeing. And then my other question is there a case for perhaps for some people to stay out of the market right now to stay safe?
Absolutely. I'll answer that one real quick. Yes. So people always look at it like, well, if I'm not in the market, I'm not in the game and I can't make money. But people also need to look at like, if you're in cash, you're safe. Or is there other investments like gold or cryptocurrency that you want to be slightly exposed to? But there's nothing wrong with sitting on the sidelines. And in fact, you'll sleep a lot better during this period being in cash. I could promise you that. So especially like, if you're young, if you're in your 20s, 30s, 40s, even maybe 50s, that's one thing, pick and choose some stocks. If you're later in life and you're in retirement, it's probably the smartest thing, at least through this period, to be in cash. And you might miss out on some gains. There's always that chance, but safety at certain points in life is really important. And then going into some other areas that I like, you have to think about what could benefit. And again, this goes back to odds. And I always try to be as apolitical as possible because, I look at the market and I tell my traders, you have to be logical and emotionless when it comes to trading, at least, because emotion we know hurts you a ton. So when I look at it, I follow this predicted.org and I look for the odds of what is going to happen. And I see now that the Democratic sweep is more likely. And even if it doesn't happen, there are certain trades that will run up into the election on that possibility. So for instance, the marijuana stocks, Aurora Cannabis, Tilray, Canopy Growth. These names have started to uptick in the last few days as the chance of a Democratic sweep has increased. And we saw the Democrats, they canceled the bill, but in the House, they were going to vote for legalization. But they canceled it. Obviously, it's not the appropriate time when you have a pandemic and so forth. But it's very clear that if you get a Democratic sweep, you're going to get legalization here in this country, probably within a year. And these stocks, I mean, you could be talking about 50, 100% upside on some of these names. Now, it's not to say there's no risk, right? I'm more interested in the run up to the election. And then if I'm up on these positions going into the election, I don't want to take that risk, right? So then I would pare those positions back, sell half, sell it all kind of thing. But those are really interesting. And then another stock like U.S. Steel. U.S. Steel has been beaten down for a long time. But if you get a Democratic sweep, you likely get lots of stimulus, probably an infrastructure bill. That stock could also be something that would be interesting. And then you go to the value names. The value names, Kraft Heinz, IBM would be something that I'd be looking at. I like the chart on IBM. Those names are a little bit more, low grade movement, but they do offer a place to be for good dividends, but then also a little bit more safety during this period.
Okay, that's great. And of course, our audience has a particular interest in precious metals, especially gold. I wondered if you could share your thoughts on where we're at with gold in your mind as we're heading into this election season.
Absolutely. So I've been a huge gold bug, mostly over the last year, even more so. So last year in 2019, I told my members that I said, listen, it's going to go to $2,000 an ounce in 2020. That was my target. So far, it's been hit. But my view on it is that we're going to go even higher. So I think within 3 to 5 years, you're talking $5,000 an ounce. And it's really because the printing of money is not going to stop. All right. The only time it's going to stop is when people aren't willing to lend the U.S. any more money. But that is a ways away at this point. And you just have to look at the dilution in the currency and say, okay, well, where am I going to benefit? And gold is absolutely a place to be. Right now, I always keep, and I always tell my traders that I keep a core position in gold and some metals. And I also always keep a core position in cryptocurrency, which again, we don't need to discuss here, but I do think it's an alternate that's interesting for the same reason, is that, you know, you have cryptocurrencies like Bitcoin that there's a maximum run of 21 million. That's all that can be printed. If it gets adopted more and more by institutional investors, it will become something that is in holdings of most people's portfolio. And with the dollar dilution, and let's be honest, it's not just the dollar. Every country in the world is printing trillions and trillions and trillions of dollars right now. You have to think about protecting yourself. I talked to them about how it's like an insurance policy. You know, maybe gold doesn't go to 5,000 an ounce in the next few years, but I'd rather have a small position always in it just in case to protect myself.
And when you mention that position, would that be physical metal or something else that you're holding for gold?
Yeah, it is physical metal. Yeah. So I do believe in holding a little bit. It's kind of like the Armageddon scenario. Like, you know, you don't really need to hold physical gold unless it's that Armageddon scenario. But I do just want to have a little bit on hand. You know, I hate being kind of a fear and monger or anything like that. So I don't want to come across as that. But in life, we buy insurance, we buy health insurance, we buy life insurance. It's just one more little thing. And by the way, we're not talking about a ton of money. I put 5% of my net worth in metals and 5% in crypto. And I just say, I'm going to leave those. You know, if they pay off in 5-10 years, great. It'll protect my overall net worth. And if not, then you know what? 5% was 5%. It's not the end of the world.
Okay, that sounds good to me. Now, we've been talking a lot about the election, which makes sense because it's coming up very soon. And we've been talking about Trump. Are there any other catalysts or trends in the market that you think people should pay attention to that maybe they could be missing because of these overarching things that are going on right now?
Wow, that's a good question. I do think if you have a longer horizon, AI, artificial intelligence, could be something that is interesting there. I think drones will continue to become a bigger player. So drone makers in the US and even globally could be an interesting play. We've heard Amazon is going to start delivering packages by drone. They got approval for that. So I think there's certain areas. The bigger question to me, and I'm more of a swing trader, so I'm a shorter term investor, is if I wait, will I get them a little cheaper? I may, but again, some of these bigger technology breakthroughs are definitely going to be something you want to have exposure to. And it's the future. It's the bottom line future.
Right. So you're basically balancing these big long-term trends with what you do in your day-to-day. And I don't think we covered maybe as closely as we should have what you're looking for in your day-to-day trades, what criteria you're trying to find there.
Yeah, so when I do day trading, it's looking for these very high percentage setups, and we talked about it earlier, the PPT methodology with which my partner and I came up with, price, pattern, and time. And so when I'm in the chat room with my members and I'm on a microphone and we're talking about, okay, this setup looks good, but it doesn't have this secondary factor. So it's looking for those two-factor trades, and you get with one factor, you know, a gap fill, for instance, or a double top or a double bottom, buying a double bottom, you know, you get maybe 60-70% odds. But as a day trader, I don't like that. I really want to be in that 80+% range, because there's nothing worse than fighting a bad trade, right? You know, and being underwater, and then you decide, okay, do I cut it? Do I add to the position? All these different questions that once you're down on a position, you have to answer for yourself. And for me, I have to do it for all our traders. So we really, and you guys, I mean, if you ever talk to any of these traders, they'll tell you, they're like, he's ridiculously decisive and aware of which ones he's going to take. And there'll be days where I don't take any trades. And then there'll be days where I take one trade. Today I had one trade. Some days I take two trades, but in average, I'm only doing one trade a day. But if that trade makes me 500 or 1,000 or a couple $1,000s, that's all that matters. I always tell people day trading is a way to generate, you know, income, but you have to do it smartly, because I mean, we know that 95% of day traders that try it won't make it. So it's a very hard thing to do. And the number one reason why traders don't make it is because they don't have the discipline. They always have that itch. They want to be in that next trade. Oh, it might make me $1 million. And it's also about thinking logically, like, all right, if I have 50,000 or 25,000 to day trade with, you can't go into it saying, I need to double this money in a week. You have to say, I'm going to make 500 a day. And then after a month, you'll look back and say, holy cow, I made a lot of money. But if you go in with these lofty expectations and you feel like you need to take 10, 20 trades a day, that's going to put you in trouble. You're going to get into situations where you fight. And even me, I mean, I've traded for, man, since the late 90s. And there's still, when I get in a losing trade, there's a little bit of emotion that peeks in. And that's the worst. Once that happens, you're on the losing end for sure with that emotion.
Okay, well, I like that. I like that realistic look at how you actually can succeed. As we wrap up here, I wondered if you could share any final thoughts with the audience as we head into Q4 and toward this election season.
Absolutely. So I would remain cautious, expect crazy moves like we got in the last couple days and we've gotten all year. I think you have to be aware that there will be an announcement of a vaccine. So I think that if you're looking for positions to be short later in maybe in a month or two, you want to start pairing out of the Zooms and on the short side of like a Zoom or a Peloton. Peloton was up again today. Amazing run, but once we get the vaccine news out, you'll start to see big players pairing those positions and they'll start to trade down. A lot of people will think that they won't start falling until the vaccine gets released to the public, but smart investors always start to move out of them ahead of time in anticipation of that. So be careful with those names. And then again, if you're looking to be long, I would go for the value names, the dividend paying names, and then some of these ones that could run up into the election at least, like the marijuana stocks, for instance, or U.S. steel stocks like that definitely have some room that are still at their lows, but could benefit from certain outcomes politically.
Okay, well, thank you so much, Gareth. That was great to have you on to talk about what's going on in the market.
Thank you so much for having me.
Thank you. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway of InTheMoneyStocks.com.